Hello everyone, welcome to another video. Today we are going to talk about impairment of intangible assets. So as we know, like when we prepare the balance sheet, so we can record our intangible assets. Okay, depending on it's having a finite useful life or it's having a indefinite useful life. Okay, if our assets are having a finite useful life, like the life of the asset in that scenario, how can we record? So we need to take the cost of the asset. From the cost we will subtract accumulated amortization, and we will also subtract impairment losses if any. Okay, so this is how you will get the carrying value of asset if it is having a finite life. If our intangible asset is having a indefinite useful life, so what you will do, simply you will record your asset in the balance sheet, like you need to take cost of asset minus impairment loss if any. So this is how you will get the carrying value of asset. So this is what we are actually going to talk about today, impairment losses. So first of all, we need to understand what is the impairment loss. Actually, impairment loss, you can say it is a kind of permanent reduction in the value of asset due to unusual or one time event, such as it could be a change in legal factors, okay, which might indicate a loss, or it could be a change in economic conditions, like maybe like a COVID pandemic, okay, or it could be in change in consumer demand. Maybe you are using this asset to produce certain product for the consumer, and due to change in demand or taste or in fashion, maybe your asset is no longer is having that much worth as it was having before. Or maybe there is certain damage, due to that damage that impacts the asset. Okay, so like it's a kind of permanent reduction. So please remember here, as in simple words you can say this way also, like when you are carrying value of asset is not recoverable or it is greater than fair value of the asset. Fair value, I can use the word here, one more word, future cash flows. If your carrying value is greater than fair value or the future cash flows, future cash flows mean to say the cash flows which you can obtain through the use of that asset or maybe through the sale of that asset. If your carrying value is greater than future cash flows or the fair value, it means your asset is inflated on the balance sheet or your asset is overstated. So simply you need to reduce the value of the asset. And how you will calculate or how you will determine the impairment loss, that of course I will explain. So but here simply impairment loss means say your carrying amount is not recoverable. Okay, for example, assume if you know there is impairment loss, for example impairment loss of $5,000. So what we need to do, immediately you need to record this impairment loss, okay, in your income statement as as a expense under the continued operation. Okay, until unless it is relevant to the discontinued operation. And of course this impairment loss is also going to reduce the value of the asset in the balance sheet. Okay, now we are going to calculate the impairment loss. How you will calculate, like if you want to determine the impairment loss, first of all I'm assuming here our intangible asset is having a finite useful life, like the useful life is known. In that scenario guys, overall there are three steps, but we usually say there are two steps approach. Okay, so step number one, I mean say it's just an indication, like check is there any event means maybe change in legal factors or like a COVID pandemic or things like that. Or is there any factor uh, or the change in circumstances indicate a possible loss? If there is any indication is there, it could be in the even the mid of the year, because under US gap, gap suggests that if you will find any indication even in the mid of the year, so you should test your asset immediately for impairment. Okay, like if you know yes there is a changes in the legal factor or economic condition, so and after that what you have to do, so you have to apply step number two overall. Okay, this is called recoverability test. Recoverability test means to say you have to simply compare the carrying value of the asset. Carrying value means to say it is cost minus accumulated amortization, because asset I am assuming here is having a finite life. So this carrying value of asset you have to simply compare with what, with the sum of undiscounted future cash flows. So you need to understand what is this sum of undiscounted future cash flows. For example, this asset is having a 4 years remaining life. So year one, two, three, and four. If, for example, I will use this asset, I'm assuming we are using this asset. So if I will use this asset, maybe I can get the benefit or the cash flows through the use of asset. Maybe in the first year, $10. In second year, maybe for example, $20. In third year, maybe $30. In fourth year, maybe $40. So let's assume it is total of undiscounted cash flows. You don't need to calculate the present value. Simply just make the summation of these future cash flows. This is what is called your undiscounted cash flows, means without present value. So I'm assuming here, for example, carrying value of asset is $120, but the sum of undiscounted cash flow is the $100. It means carrying value is greater than undiscounted cash flows. Okay, so in simple words, your asset is overstated in the balance sheet. Now simply you need to reduce the value of the asset. Okay, but please make sure and note this point: the difference of these two value is not your impairment. No, under US GAAP, if this is the scenario, like your carrying value of asset is greater than undiscounted cash flows, then you have to determine the impairment loss, which is called measurement test, you can say, because you are going to quantify the amount of uh, impairment. Okay, and if you want to calculate the impairment loss will be equal to carrying value of asset minus fair value of asset. Of course, here carrying value of asset, for example, is 120. Maybe fair value could be here, for example, it could be a $90. So this difference, actually the difference between carrying amount and fair value, is your impairment loss. So please make sure here, like you should note this point. What is the point here? What I'm saying, actually I'm saying that when you want to determine the impairment loss, like recoverability test, at that time you will compare the carrying value with the undiscounted future cash flows. Okay, this is when you want to determine. But when you want to quantify the amount of impairment loss, like when you want to measure the impairment loss, so you have to compare the carrying value with the fair value. Okay, so this difference, actually the difference between carrying value and fair value, is your impairment loss, which you will take it to the income statement and you will reduce the value of the asset. Okay, and we will practice here. And guys, here let me tell you here, for example, what will be the entry. So entry to record the impairment loss, we will debit the impairment loss, and you can credit the intangible assets, okay, directly. Or if you want to maintain accumulated impairment loss account, it's okay. But in GAAP, this is the entry is written: debit impairment loss, credit the intangible assets. So this loss mean to say the debit side of the entry, it will be taken to the income statement under the heading of continued operation, of course, income from continued operation. And the credit in intangible asset mean to say it is going to reduce the asset value in the balance sheet. Okay, so please, we have a three more notes which you need to remember. The note number first is: a previously recognized impairment loss must not be reversed if asset is in use. I'm not saying if asset is held for sale. I'm saying if asset is in use. So you should not, you cannot reverse any previously recognized impairment loss. And we have a second note, then we will practice here. After the recognition of impairment loss, your adjusted carrying value mean to say cost of asset minus accumulated amortization minus impairment loss. So this is called your adjusted carrying value. It should be equal to the fair value of the asset, and this is what I will prove. And the third is here, note number three: your adjusted carrying value of asset is, it will be the new cost basis for the remaining period, and this adjusted carrying value should be amortized, okay, in the future period. So here we go. We have here simple example to practice first, then I will show you exam level questions. For example, here a patent was purchased on the first day of the fiscal year for $90,000. It is the cost of the patent. Its useful life is 5 years with no residual value. At the end of the year three, like at the end of third year now, an event occurred indicating the asset may be impaired. The patent's fair value, this is the fair value is 350,000, and its undiscounted future net cash flows are 355,000. And guys, of course, undiscounted future cash flows examiner will provide you in your exam questions. Okay, now you want to calculate the impairment loss. So simple, what you need to do first, you need to calculate here carrying value of the asset. Okay, carrying value, carrying value, how you will calculate, you need a cost of asset which is equal to $900,000. From there you will subtract accumulated amortization for 3 years. Okay, for 3 years. And how you will calculate the amortization expense? So simply you need cost of asset which is $900,000 minus residual value, it's zero because no information is provided, and you will divide with the 5 years. So this will give you annual amortization, and simply you need to calculate amortization for 3 years. So you will multiply with the 3 years, and it will give you amortization expense of, you can just calculate, I can just check here how much it will be. I guess, and it is if you will calculate accumulated amortization, I guess it will be $540,000, and it means your carrying value is $360,000. This carrying value you have to compare with the undiscounted cash flows, and undiscounted cash flows are given here, it's given in the question here. It is 355,000. Okay, it's given there, just you can check 355,000, and you can see your carrying value of asset is greater than undiscounted cash flows. It means your asset value is not recoverable, so simply there is impairment. So now how you will quantify the impairment? So now you can calculate the impairment loss, which is equal to carrying value minus fair value. If carrying value is 360,000, which you have calculated here, okay, minus fair value, you can just check from the question what is the fair value. The fair value in the question is 350,000 given here, so it means the difference will be the impairment loss. So fair value is 350,000, it means impairment loss is going to be 10,000. Okay, this is your impairment loss. Now with this 10,000 you will pass the entry debit impairment loss, credit intangible assets. Now in your balance sheet in year 3, in your balance sheet, how you will record your asset, guys? Simply you need to take it the cost of asset, cost was 900,000 minus accumulated amortization which is 540,000 for 3 years, we just calculated here, this value I'm taking, minus what, impairment loss. Impairment loss is $10,000. Now if you will calculate the carrying value, so let me just calculate, it should be equal to the fair value, and which is 350,000. Okay, 350,000. And see, this is your adjusted carrying value which is equal to the fair value. Okay, this is what I was telling you. So and this impairment loss will not be reversed if asset is in use. This is how you will deal with it. Now guys, let me tell you about the asset which is having a indefinite useful life. Okay, assume now asset is having a indefinite useful life. So what you will do here, guys, in this scenario, so you have to apply only first of all this step, and then you have to apply only this step. You don't need to do this step. Like you should not compare carrying value with the undiscounted cash flows. Why we can't compare? Because if asset is having a infinite life, so we cannot estimate undiscounted cash flows because we don't know the life over how many years we should estimate, we don't know. So that is why simply you will skip this second step, recoverability test. You will apply the step number 1 in case of infinite life. Okay, and you will check is there any indication for the impairment loss. If yes, directly apply the step number 3. And what you will do here, you will take it here, impairment loss equal to carrying amount of asset minus fair value of asset, and remaining things are the same. Adjusted carrying value of the asset, like when you will record the asset in your balance sheet, like cost minus impairment loss. this is called your adjusted carrying value. It should be equal to the fair value of the asset. Okay, but only this step you will not perform, this step. Okay, even in the exam question, sometimes to confuse you, examiner might give you undiscounted cash flows for the asset which is having a infinite life. Please ignore this step. Okay, let me just show you example for that. Let's go there. And same point, you also need to remember, you should not reverse an impairment loss. Okay, if asset is in use, I'm assuming you are using this asset. So here we have example. For example, a company has a trademark with the carrying amount of 750,000, he told you, and it is having a indefinite useful life. At the end of year 4, an event occurred indicating that asset may be impaired. The trademark's fair value is $700,000 and its undiscounted future cash flows is 790,000. Guys, just ignore this undiscounted cash flows, okay? Because this asset is having a indefinite life. So simply you need to apply step number or check is there an indication, and he told you yes, there is a indication is there. And now simply you need to compare the carrying value minus fair value to calculate the amount of impairment loss. Okay, so carrying value of asset, he told you it is 750,000, and fair value of the asset it's given here, which is $700,000. Okay, so it means 50,000 is going to be your impairment loss, and with this impairment loss, what entry you will pass? Debit, impairment, credit, trademark, I mean it's intangible asset. And here is the note is written like undiscounted cash flow you don't need to consider when asset is having an indefinite useful life. Okay guys, so now let's practice few questions, couple of questions, and then I will also tell you at the end how to calculate the impairment loss if asset is held for disposal or for sale. Here we have a question. Question number one, on January 1, year 1, this is at the start of the year 1, a C acquired a patent for $500,000. This is the cost of asset using the straight line method. So we will amortize over straight line method. Begin amortization, it's properly over its estimated useful life of 10 years. This is useful life. The asset has no residual value at December 31st, year 4. Like this is the at the end of year 4, huh? You purchased at the start of the year 1. A significant change in the business climate caused C to assess the recoverability of carrying amount of patent. C estimated the undiscounted future net cash flows from the patent would be 325,000. That is and that its fair value was how much? 275,000. Accordingly, for the year ended 31st December year 4, C should recognize an impairment loss of how much impairment loss should be there, guys. Simple. First of all, you have to compare at the end of year 4. You are sitting at the end of year 4. You have to compare carrying value with the undiscounted cash flows because this asset is having a finite life. Okay, undiscounted cash flows are somewhere given here. It's given here. So it's 325,000, and you have to calculate the carrying value. Carrying value, how we can calculate? We need to take a cost of asset, which is $500,000, and minus accumulated amortization for 4 years. For 4 years, okay. And amortization, how you will calculate, guys? So you need to take a cost of asset which is 500,000, residual value 0, life is 10 years. So I guess it will give you, if you will divide, so 50,000 per annum, and you need for 4 years, so it will give you $200,000. Check the calculation accuracy, please, huh? So here it means my accumulated amortization is $200,000. It means my carrying value is $300,000. So I will place here 300,000, which is the carrying value. And see, carrying value is not greater than. So carrying value is less than undiscounted cash flows. If carrying value is greater than undiscounted cash flows, then there is impairment. If carrying value is less than undiscounted cash flows, then there is no impairment. So it means how much impairment loss you will book? Zero. There is no impairment because carrying value is less than undiscounted cash flows. It means your asset is not overstated at all. Okay. So here we go, we have another question. For example, we have a question number two. After an impairment loss is recognized, like you have already booked the loss, the adjusted carrying amount, I mean to say, adjusted carrying amount means a cost minus accumulated amortization if asset is having a different life minus impairment loss. This is called adjusted carrying amount. Adjusted carrying amount of intangible assets shall be its new accounting basis. Yes, it should be the cost for next year. Which of the following statements about subsequent reversal of previously recognized impairment loss is correct? Guys, simply if you have recorded any loss in the past years, in previous years, impairment loss, you are not allowed to reverse it. So reversal is not allowed under US cap at all. Okay, so it means it is encouraged but not required. No, it is strictly prohibited. So it's prohibited, you can't reverse it. So option B is correct. C is they're telling you it must be disclosed. No, when you cannot uh, reverse it, so why to disclose? So it is required when reversal is considered permanent. No, it's not like that. So reversal is not allowed at all. Okay, this is what the option B is correct. Now guys, last point I want to tell you, because sometime in your exam question he might tell you the asset is held for sale. Okay, so how to calculate the impairment loss for that? It's quite simple. So here we go, let me practice with both assumptions, guys. So here we have a question number 3. We have a facts. We have a assets net carrying value is 1.2 million. It's net future cash flows. Net future cash flows means he didn't use the word present value. It means it's undiscounted cash flows are projected $1 million. Assumption number one is what? If asset is held for use, so how to calculate the impairment loss? Guys, if asset is held for use, what you will do? Impairment loss, I'm assuming there is indication for impairment, and I will apply recoverability test, which is carrying value must be greater than its undiscounted cash flows. Okay, carrying value here is 1.2 million. I'm solving if asset is in use. This is what we already studied. So it's greater than undiscounted cash flows is 1 million. So it means it's greater than 1 million. Okay, so it means there is an impairment. Okay, but if you want to calculate the impairment, so this is the recoverability test. Now you want to calculate the impairment, so impairment will be equal to carrying value minus fair value. Carrying value is 1.2 million and minus fair value. So here he told you fair value FV are present value, because sometimes present value of future cash flows are considered as a fair value, by the way, in finance. Okay, so if it is given as a present value, you can assume it's fair value if he didn't tell you fair value separately. So your fair value of net cash flows is 700,000. So there is a 700,000 is a fair value. So it means your asset is overstated. There is the carrying value is more by $500,000. It means this is the impairment loss. Okay, 500,000, and this impairment loss should not be reversed in the future period. And your adjusted carrying value will which will be equal to the fair value, like adjusted carrying value, how cost minus accumulated amortization minus impairment loss, it's called your adjusted carrying value. And of course it should be equal to fair value, and fair value is how much? $700,000, because previous carrying value was 1.2 million and now you're going to record the impairment loss. So of course your adjusted carrying value will be equal to $700,000. Okay, but now I'm assuming here, for example, if you have a same data, please guys, you should remember here, if you have a same data, like your carrying value of asset is 1.2 million, your undiscounted cash flows is 1 million, and here fair value of the asset is 700,000. Now we have assumption number 2. If asset is held for disposal, okay, asset is held for disposal, same fair value 700,000, and cost of disposal, maybe you will sell it, it is going to be $100,000. So in this scenario, guys, what you will do here, please remember here, first of all, you will apply the same rule, compare the carrying value, it's greater than undiscounted cash flows. Okay, which you can get might maybe through the disposal here. Okay, so here uh if your carrying value is, and your carrying value is 1.2 million and your undiscounted cash flows are 1 million, so it means their amount is not recoverable, undiscounted cash flows. Okay, it's not recoverable. Now what you will do, you will calculate the impairment loss. Now impairment loss, how you will calculate? Again, carrying value minus what? A fair value. Okay, carrying value is how much? We have again 1.2 million. Okay, minus fair value is what? $700,000. Okay, it means your impairment loss is 500,000. Now maybe you are thinking, then what is the difference? Difference is that, guys, actually if you have any impairment loss, which you will determine this way, in this impairment loss, simply you will add cost of disposal. Just this is the difference. Cost of disposal, which is for example $100,000 in this question. It means your total impairment loss is going to be $600,000. Why we added 100? Because it's also a cost. It's going to increase your cost. Okay, so it means here this is your impairment loss now. And of course, if asset is held for sale, guys, you don't depreciate any or you don't amortize any more, and the reversal of impairment loss is allowed on asset held for sale under US cap. Okay, but if it is assets are under use, reversal is not allowed. Okay, I hope guys it is clear. Just you can go through. Just let me finish this video now. Thank you so much, guys. See you in the next video. Bye bye.